Bitcoin is on fire again, surging past $109,000 as institutional money floods in. But the real question is, why now? Welcome to the Digital Finance Daily News Show on the 2nd of July. Please take a second to hit the subscribe button while we walk you through what's happening in today's world. What's driving this midsummer crypto rally? First, price action has turned aggressive. After consolidating near $105,000, Bitcoin exploded higher. Bulls are in control. We're seeing major regulatory momentum too. The US Senate passed the Genius Act with a 68-30 vote, setting a federal framework for stablecoins backed one-to-one by liquid assets, clearing a thorny regulatory hurdle. Stablecoin issuers now face full reserve backing, monthly audits, and AML compliance, transforming stablecoin legitimacy and opening doors for fintech giants and banks to enter the space. Stablecoin providers are racing to secure trust bank charters. Circle has applied for a national trust bank license and wants to create a first national digital currency bank. Ripple is also seeking a federal banking charter for its stablecoin Rust, signaling that crypto firms intend to operate at the highest institutional level. Federal oversight is no longer optional, it's the path to mainstream acceptance. At the state level, Texas just signed into law a strategic Bitcoin reserve, becoming the third U.S. state to hold BTC as a reserve asset. Texas joins Arizona and New Hampshire in embracing Bitcoin as a hedge. This growing trend of public sector digital assets sends a powerful signal to investors. Bitcoin is gaining real-world utility beyond private portfolios. Now, let's talk upside targets. Rosenberg Research says Bitcoin must clear resistance around $114,000 to open the door to a 25% rally toward $143,000. Similarly, Bitwise forecasts a 30% surge this month if key macro and technical catalysts align: geopolitical calm, anticipated Fed cuts, ETF inflows, and strong adoption signals. July could be explosive. Add it all together, institutional demand is surging, regulatory clarity is taking hold, US states are building Bitcoin reserves, and technical setups are aligning. The stage is set for a potential move to $130,000, or even higher if volume keeps pouring in. But this isn't just about the US Bitcoin surge as part of a larger, global economic rebalancing. In Asia, Japan's yen has hit a 3-decade low, and the Bank of Japan continues its ultra-loose monetary policy. Capital is fleeing into harder assets, and Bitcoin is one of the top beneficiaries. Meanwhile, the Chinese yuan is under pressure amid slowing economic growth and global capital flight. As trust in fiat currencies declines across major economies, Bitcoin stands out as a portable, borderless, censorship-resistant asset. Over in Europe, inflation is heating up again despite aggressive rate hikes from the ECB. German industrial output is down for the 4th month in a row, and energy prices are back on the rise. Investors are searching for shelter, and unlike gold, Bitcoin offers 24/7 liquidity and global accessibility. This is more than price action. It's a structural rotation. Let's not forget geopolitics. Tensions between the US and China are escalating again, with new export restrictions and diplomatic standoffs. Middle Eastern instability is rising, with oil price spikes adding inflationary pressure globally. The traditional financial system is under stress, from wars to trade barriers to central bank missteps, and Bitcoin offers a parallel system that doesn't rely on sovereign trust. That's why we're seeing emerging markets lead the way in adoption. Argentina, Nigeria, Turkey, these are countries where inflation is out of control and Bitcoin is being used daily as a store of value. Wallet downloads and peer-to-peer trading volumes are hitting all-time highs. And as Layer 2 tech improves scalability and speed, Bitcoin's use as money, not just an asset, is gaining real traction. The next phase isn't just institutional. It's global, grassroots adoption meeting institutional integration. As July unfolds, remember this: we're not just watching a price chart, we're witnessing a monetary revolution. If you're in, stay sharp. If you're not, you might want to reconsider. Like, subscribe, and hit the bell. The story of money is being rewritten, and it's happening right now.